Hi everyone. I want to talk about how child support affects your borrowing power. One of the biggest myths I hear is because I receive child support, the bank will just count it as income. Or the opposite, because I pay child support, I won't qualify for a home loan. Truth is, neither of these is always correct. Let's talk about it. Let's talk about how it actually affects your borrowing power. When a bank looks at your home loan application, they're really asking one question. Can this person comfortably afford the repayments? Child support is simply one part of the question. If you're paying child support, lenders treat that as an ongoing financial commitment, just like any other regular expense. That means it can reduce the amount you can borrow because it's money that's already committed each month. Now, that doesn't mean you can't get approved. It just means that the bank needs to factor those payments into your overall budget. I've helped plenty of clients who pay child support buy homes or refinance successfully. The key is understanding how it affects your numbers before you apply. So, what if you're receiving child support? This is where people often get surprised. Most lenders will count child support as an income, but not all of them do it the same way. Some lenders will use 100% of the payments if they're stable and well documented. Others might only use part of the income. Some might want to see a formal child support agency assessment. Others are happy with a private agreement, provided there's evidence the payments have been consistently received. So if one lender says no, that doesn't necessarily mean every lender will. It's one of the biggest reasons it's worth speaking to a broker who knows which lenders have policies that suit your situation. The other thing is, some lenders will only take into account that money if your child is under the age of 11. Others don't care. As long as you're getting it, they'll count it. You may not know which one is which. Talk to someone. You'll find out soon. Consistency is important. Whether you're paying or receiving child support, lenders like consistency. If you're receiving payments, they'll usually want to see that they've been arriving regularly. If the payments have only just started or if they change significantly from month to month, some lenders may take a more conservative approach. You've got to think about this when the time comes. So likewise, if you're paying child support and the amount is about to change because of a new agreement, it's worth discussing that before submitting your application. Timing can make a real difference. If you've recently separated, this is something I see all the time, you're trying to sort out property settlement, parenting arrangements, child support, and then you're also trying to work out whether you can keep the family home or buy somewhere new. It can feel overwhelming. The good news is you don't have to have every single detail perfect before you start the conversation. A broker can help you understand what your borrowing capacity is likely to be based on your current situation and also show you what it could look like once your financial agreement is finalised. That way you're making decisions based on real numbers, not guesswork. So if child support is part of your financial future, don't assume you're out of options. Whether you're paying it or receiving it, the right lender and the right loan structure can make a significant difference to your borrowing power. If you're wondering how child support is likely to affect your ability to either buy a home or refinance or keep your house after separation, I'd be happy to run the numbers for you. Sometimes a quick conversation can give you a lot more clarity than hours of searching online. I'll see you in the next video.